What is going on, family? It is Mr. Banks here coming at you live with another trade recap. And today I'll be going over Amazon, why I took the trade, how we got 100% banger on it, so that you can understand to take trades on your own, because that is why I've made this channel. I want to make sure that everyone here learns how to fish on their own and understand why they're taking trades so that you can become a profitable, consistent trader. But first, go ahead and hit that like and subscribe button so you don't miss any of this educational content I put out to make you a better trader. Now, let me go ahead and get started here, guys. As always, these are live trades taken with the team in the Wolves of Wealth Discord. Amazon, we hit 100% banger on it. Shout out to the team for absolutely killing it today, win after win on a choppy day. Ran it up, but you guys came here for the trade recap and understanding why I took that Amazon trade. So as always, guys, we want to start out and zoom out. Start out, zoom out. That is my lesson of the day. Always start zoomed out. What is happening on the bigger scale, right? What is the macro trend? We can always start at the monthly if we like, coming down to the weekly, coming down to the daily, right? So monthly, weekly, daily, but at least start with the daily. At least start with the daily and understand where we're at. So Amazon, I was looking for a pullback at the beginning of this day. Now, why was I looking for that? Well, we were a little bit overextended. I mean, we've ran from what, 118 to 139 in 1, 2, 3, 4, 5, 6 trading days, essentially 5 trading days before the open. It should be the 6th one, now closed. So essentially 5 trading days, we've ran 21 points. There's a have to be, but definitely looking for some kind of pullback there when it comes to Amazon. Amazon typically, when it has these runs, right, we get some sort of breath and a pullback within these runs, right? I mean, we could look in the past. Yeah, it says Amazon ran. Absolutely. But we at least get some pullbacks even when we shoot up big. Just the pattern there. We want to look left and understand what is the pattern of the stock. Even when we ran, right? We always get some sort of nice, decent pullback every time we run big. And now today, probably one of the biggest runs Amazon has gone on in a very, very, very long time, looking for that pullback. So now today we can go to the 1 hour. Yes, sorry, trade Amazon a lot. So we have a lot of lines to probably clean this up. But today we're looking at this 139 to 140 for that reject. Guys, one thing to keep in mind are levels to know. Let's go to Google Docs here real quick. Dun, dun, dun. All right. Things to know here, guys. Pre-market high, pre-market low, yesterday's high, yesterday's low. Now, these levels should always be known whenever you're trading, right? Whenever you're trading, these levels should always be known every single day. So levels to know. Pre-market high, pre-market low, yesterday's high, yesterday's low. Now, I have gotten a lot of feedback about this, and it seems that, I get questions, well, how long do we keep them on for? Do I keep them on every single day? Do I draw new ones every single day? Yes, every single day you should know these new levels, right? Pre-market high, pre-market low. Obviously, yesterday's high, yesterday low. They happen and create new ones every single day. So you should know these levels. But one of the things to keep in mind is if you're on a chart, right, when we're trading, do you typically trade the 5, 2 minute? Lately, we've been trading a lot of the 5. And when we're on that chart, we can clearly see when we're trading the pre-market high, right? Pre-market low, essentially. This would be the pre-market low right here, but we have after hours. Sometimes that comes into play, sometimes it doesn't. Today it did, right? So after hours, always kind of know that. Always know pre-market low when it opens up. Yesterday's high of the day and yesterday's low of the day down here. Now, obviously, we were in a big uptrend, so yesterday's low of the day really isn't that important, but you should know it. The things about these levels, guys, is you do not need to draw them every single day. If you're a visual learner, if you're newer and you can't grasp, these levels and you need to draw them, go ahead and draw them. But if you're trading, you really don't need to draw these levels every single day. It can crowd your charts and make you a little bit more confused, have too many lines on the charts. Now, again, I trade Amazon a lot, so should clean up my lines a little bit here, but sorry in advance. But it can crowd your charts, especially as a newer trader. Just drawing those levels every single day, I have gotten the feedback that you get overwhelmed with too many levels. So get to the point where, yes, you know where it's at. I mean, it's clear as day. Here's the pre-market high, pre-market low. You have after hours low, yesterday's high, and then obviously way down here was yesterday's low. But you can see it clear as the day on the chart. While you're trading, you can see these levels very, very clear. You don't necessarily need to draw them, but if you want to, that is great, but always know them. Now, the second part of this is, why are these so important? Well, typically, pre-market high, if we're, let me just screw this down a little bit. If we're above, typically we look is bullish and we look for a trend up and buy any pullbacks within that trend. Typically below pre-market low is going to be bearish, right? So these are some indicators, if you will, what you should be looking at when it comes to these levels. Now we use pre-market high. If we break above it and we continue above it and we hold, typically we're going to at least create some sort of bullish trend or some sort of breakout where we can look to buy pullbacks on this breakout. Below pre-market low, we can look to typically see a bearish trend or at least look to take a nice short position for a good gain below pre-market lows. And we can short the pops anytime we come up and reject below pre-market low. So again, if we're above pre-market high, we can look to take the breakout. It's typically bullish. As long as we stay and we pull back and hold above pre-market high, typically head higher. If we're below pre-market low, we typically, if we reject and keep rejecting below pre-market low, we can head lower. So just think pre-market high above is typically bullish. Pre-market low below is typically bearish. Now, where does yesterday's high and yesterday's low come into play? Well, depending on where the chart is, if we're above pre-market high and we're above yesterday's high, those two things are confluences, and typically we are going to see a higher move up. Why? Well, the price has broken above yesterday's high and pre-market high. So two big levels where, right? So if we have a high of yesterday, that shows that there are bears stepping in, there were sellers stepping in, right? There's the high of yesterday, right? So that's as far as we can reach, as far as bulls can get, and then we rejected, right? That's where sellers stepped in. So if we open up and we're above yesterday's high, and likewise with pre-market high, right, it shows that's where sellers step in. So if we're above those highs and we're holding, that shows that now the buyers have outweighed the sellers, and it's typically that's typically bullish, right? If there's more buyers than sellers, we're going to go up. There's more demand than supply. So at these levels where we saw sellers step in to defend, has now been broken by the buyers and we're holding above it. That is why that is going to be bullish sentiment. Hope that makes sense. And likewise, below pre-market low, right? That's the low of the day. So that shows buyers stepped in there, right? There was a bounce there. There was support there in the pre-market, right? It was the lower pre-market where buyers stepped in. If we're below that, the sellers are now outweighing the buyers there. So that is why we have a bearish sentiment. So that's why these levels are important. I've never heard anybody break it down like that. So I hope that was a good lesson for you, and hope that broke it down for you in simple terms. And just like the pre-market high and yesterday's high, the pre-market low and yesterday's low, right? Two big supports. If we're below each of that, right, we had buyers step in and hold those levels, right? Created the lows, and we're below them now, right? Now the sellers are outweighing the buyers, right? So that's where you get that bearish sentiment below these levels, and you get the bullish sentiment above those levels. Now, after we break that down, let's come into this chart. Now, what is happening? What happened this morning? Why did I take the short trade on Amazon for 100%? Well, one, we saw, in my eyes, we were overextended. Amazon typically doesn't run this much without a decent size pullback. It's just the pattern of Amazon. Whenever we even get, any slight push in Amazon, we get a pretty big pullback by this point. So this is what I mean by overextended. I think this is a very overextended stock. Does not mean that it could shoot up and continue 100 more points, but I was leaning a little bit more bearish. And when we opened up at pre-market high, right? We had a pre-market high. We kept rejecting. We could not break above. So just like we talked about yesterday, but pre-market high bullish, but if we're below, we can't get above that. That's showing me with that overextension that I'm seeing that we should get some decent pullback. So after the open, right, we're trying to break up. We cannot break above this level in the open. Now, I did take a little bit higher risk trade. It was a little bit early, 5 minutes into the market, but we can see here I had a level at 138.50. Let me see if I can find that. Here's 138.50. Dun, 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 dun. I had 138.50 right here where we rejected, right? So 138.50 has been my level for quite a while now. So going into the intraday, I had this level at 138.50. We could not break above it. So we could not break above pre-market high. We came down. We tried to bounce, right? We tried to bounce. We could not break above pre-market high or putting in a lower high or rejecting. That is why I took the trade. Not super complex, guys. Not super complex. I know a lot of people get surprised, especially in the group. They just like, how did you see that? One, been trading for a lot of years. Two, break it down simple. Overextension. If we're looking at the bigger picture, we can see Amazon. This is pretty overextended for Amazon. Now, other stocks have different personalities, but for Amazon in general, this is an overextension of it. Typically, we see a nice pullback by this point. We still have to play the price action that's in front of us. And the price action that occurred was we pushed up in pre-market. We kept creating lower highs, right? And then we eventually got that sell. Now, another time frame I use is the 2-minute, right? So 2-minute shows us a little bit cleaner. Well, what's happening on this 2-minute, right? So we have our highs. We pretty much double topped in the pre-market. We're rejecting this level, right? Putting in lower highs, lower low, lower highs, lower low, lower highs, lower low, and then change break of structure here, change of character here. But what is that when we're putting in lower highs and higher lows? Well, as we know, right, we have our high, lower low, lower high, lower low, lower high, lower low. That is a bearish trend, my friends. That is a bearish trend. When it comes to higher highs, higher lows, higher highs, right, that is a bullish trend. So start to recognize these type of patterns and these type of trends from on the macro side, so the bigger picture on the higher time frames, down to the intraday, right? When we're taking a 5-minute, 10-minute, even 30-minute, down to the 2-minute, whichever one you use on the smaller time frames, start to recognize these type of patterns. This is another way that you can hold onto your call, right? So if you take a put, right? So if you take that trade, we're in the trade. We can now hold on to runners until we break back above and break this trend of this bearish trend. I mean, this is a textbook, picture perfect bearish intraday trend. I mean, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. But then we didn't create another lower low, pretty much double bottom and bounced. But start to recognize these patterns, guys. Again, so let me recap. Go back to the top. Go back to the bigger time frames. On the daily, macro trends, right, are going to show you. Yes, the trend is up. It is a bullish trend. Don't get me wrong there. But for Amazon, the pattern typically, even when we get big push-ups like this, we've ran 21 points in about 5 days, 6 days now. Typically, we see a big pullback, right? So I was leaning more towards the bearish side. And then once the price action confirmed that today, where we were rejecting pretty much double top to pre-market high, and we could not break above. I mean, we can see here that, the bulls are trying. We get big push-ups here. We can even go down to the lower time frame, right? We're still getting wicks here open, but this is showing me even with these wicks, right? We're just trying to sell. We get these push-ups here open. This was telling me that that short trade was there, very quickly into the market. Double top here. And we're trying to push up, right? We're having these long wicks to the bottom because, as we know, the candlesticks tell a story, right? They're always telling a story. They're telling a story between buyers and sellers. And that is essentially what price action is, or at least what price action is to me, is watching these candles, right? Price action is the story of the chart. And what these candlesticks tell you is a story of buyers and sellers. So we're getting these push-ups here. All right, it's showing me that sellers keep trying, buyers keep buying it up, but the sellers are pretty much outweighing the buyers at this point. Every time we get a push up, we just create these lower highs, right? We can't necessarily break out, and we keep creating lower highs into our level, and we finally got that sell. This would have been another great entry into this trade here. When we came up, we rejected it, and then you could have just rode that bearish trend down. Hope you guys enjoy this. If you have any questions, drop them in the comments. We'll try to be making more of these videos out this year. It is coming into the holidays. We'll be traveling a lot, but hitting hard the start of next year in January for the rest of 2024. I will be going to be trying to do these videos every single day. My goal is to do them every single day for all of 2024, every single trading day, at least 5 days a week for you guys. So get ready for that. I'm taking it a little bit easy because it's the holidays, but still trying to get these out to you on important days, on important lessons when it comes to why we take these trades, right? Understanding the macro trends or macro patterns, understanding the price action, the story that is being told by the candlesticks within the intraday, and understanding intraday trends as well, right? Bearish trends, bullish trends, understanding those patterns. Hope you guys enjoyed this. Again, appreciate you guys for coming out. I know you guys are going to have a great rest of the week. Good Friday, a good weekend, and then a good start to next week. You all are amazing traders, and I believe in every single one of you. I know that you're going to become profitable and consistent. Keep working hard, keep getting after it. Again, my name is Mr. Banks. Thank you guys again for coming out. Love you guys. Until next time, I'm out.